In this video, we're going to take a look at a simple but often effective trading strategy using breakouts. Hello, I'm David Jones. Welcome back to the latest installment with Trading 212 of our charting and technical analysis course. This week, we're continuing with the theme of support and resistance, looking at these big levels in the market. Now, I finished off last week saying, of course, these levels don't stay intact forever. You know, there comes a point when the market will break out through a previous support or resistance. And this can often signal the start of a new trend. You know, if a market really starts moving, then clearly it's got to break through a level that was a problem in the past. So that's what we're looking at this time round over all sorts of time frames. So as usual, let's start off by looking at the theory, then we'll look at some real markets. Going sideways, clearly we've got resistance up here, the market rallies up, market sentiment shifts, sellers come back in and push the price down. The breakout is when it's approaching it again. We're expecting it to run out of steam, but bang, this happens. This is a breakout to the upside. And of course, if we were looking at this level down here, then a breakout below here would be a breakout to the downside. So traditionally, it's a sign that sentiment has changed. And in this example, the normal expectation would be for the market to move higher. They can be difficult to trade because you get false breakouts. But let's look at a couple of different ways of trading this. So one way is simply when the market breaks the level. In this example, we just buy. Of course, if it was breaking to the downside, we'd be a seller. So we're jumping in straight away. If that level is 100, let's say the market trades to 102, we're just going to buy in and hope the market's going to move higher. When it comes to stops, this is where it can be difficult. I mean, breakouts tend not to be very clean and suddenly the market just zooms up nice and easily. There will be an element of the market chopping around. So I think it's an idea, you know, to have our stop somewhere back in the breakout zone. Maybe an easier way of placing stops is to be a bit more patient. So let's just take a couple of steps back. So the market breaks out. Rather than buying straight away, perhaps one approach is to wait to see what happens next. If the market maybe pulls back a little bit, then shows some strength and starts to move, we have, I think, you know, maybe an obvious area to have a tighter stop. You know, so we've seen the market break out. There's been a bit of selling to push it back, but the market's rallied again. So maybe buying here with a tight stop under there is an approach that some traders may prefer. The downside, of course, is if the market breaks out and takes off and doesn't pull back, then you miss out on the move. But we'll look at some real examples in a second and we'll see how these approaches might have worked. Right, that's the theory of how it works. They are easy to spot. You know, if you're looking at the chart and you see a level and it breaks, there's your breakout. But they can be a bit tricky to trade because it doesn't necessarily mean it's going to be a clean break. So let's look at a few examples and the different ways that maybe we could have tried to profit. Here's a short-term example on a foreign exchange pair, euro-dollar, zero spreads. So what we're looking at here, it's the end of October through to the first week of November, and we've seen the euro slid heavily, has rallied, but it really can't get through 116.91. So an aggressive strategy, if you thought, okay, if the market breaks through 116.91, maybe you set an order at 117, you want to be a buyer. Let's just walk forwards and see what happens. So we can see this was a problem back on the 2nd of November, the 3rd of November, comes back up to it on the 10th of November, and we see a similar thing happening again. The market really doesn't want to rally up through 117, but if we jump here, the 14th of November, so 7 to 8 o'clock in the morning, UK time, we do see that level break. So if we're just buying the breakout, an aggressive strategy would be a buy now. And maybe we put our stop loss under the most recent lows. So the lows that were set during the early hours of the morning, maybe down around about 116.55, that sort of area. But either way, the breakout is the signal to buy in this example. So we're in straight away just on the break. In this example, it worked well. There's our break. The market doesn't really look back, and in fairly short order, it's 150 points higher. So and it moved almost in a straight line. So if we were trailing our stop loss up, we would have caught a chunk of the move. But there's a good example, I think, where just buying that breakout straight away, big level, and the market did really rally, and it would have been a profitable trade. But sticking with this same euro-dollar chart for now, I thought it's important to highlight an example where it didn't work. You know, we had the lows from back here, 27th of October lows, around about 115.70. The market breaks below those on the 7th of November, So if we'd have sold the breakout there with the stop loss, we didn't get any follow through, ended up being a false break, and we would have been stopped out. So this does highlight, I think, why it's always important to have some sort of risk control in place, some stop if it doesn't work out. Now for longer term breakouts, I thought it would be interesting to look at a daily chart of an individual share. We've got Facebook here, Facebook shares, just to see really how the breakouts have performed. So we can see September 2016, rallies up to about $133 a share, rallies back there again in October 2016. And it's not until the next year, February 2017, we finally get the break. And the break of this big level, this big barrier, did signal the next rally higher, and we didn't get much of a pullback. But look at what happens here in April. It does get a bit messy. We've got that level at 154. The market sort of pokes through during the day, but keeps giving it up, then pokes through again. So if we'd have bought on the breakout there, we would have had to stand quite a big move against us. And the logical place for stop losses was probably below those old lows. So it's not as clear cut that you're guaranteed to make money on a breakouts, because you do get false breakouts and you do get quite a bit of choppy trading. What's interesting, I think, is what's happening at the moment. We have these old highs for Facebook from July 2017, around about 175, and towards the end of October, we've seen the level break. So again, I think this is an interesting one to watch. For plenty of people, we've broken out, we've pulled back, and now we're seeing a bit more strength. So maybe one idea for a stop loss is underneath that recent low from the end of October, so somewhere below 167. But hopefully you can see, just because a market breaks out doesn't necessarily mean it's going to carry on straight away in that direction, but it can be a good sign that sentiment is shifting. So in those examples, we were jumping on the break straight away, but let's wrap things up by looking at something a bit different. This time around, we're looking to sell a breakout to the downside, but we're going to be patient. We're going to have a look at the short-term chart of the German stock market index. This is an hourly candlestick we're looking at. So this is from the beginning of November. So the market gapped higher, left a lower 13,300. Came back down to it 7th of November and it holds. And then it breaks. Now, if we were being patient, we'd be looking to sell short, but we want to see a bit of a bounce back to get a better price to sell short and have a better place to set our stop. If we'd been waiting here, we never really got it because the market sold off so heavily. 13,300 was the level, and it traded down a good, couple of hundred points over the next 6 hours or so. So we would have missed out if we were waiting for a better opportunity there. But it has given us, I think, another level. If we're looking at short-term breakouts, let's pick up on these lows and be thinking about selling short if those lows are broken. So we're watching 13,100 for the break. We're not going to sell it straight away. We want to see it break, then rally, run out of steam, then sell short. What happens? So once again, when the level breaks, we see a really sharp sell-off and the market drops 150 points, but it does bounce back, runs out of steam near the breakout point. So again, this could be an opportunity now where we've been a bit more patient, selling short, maybe putting a stop loss up above these highs here. Let's just step forward into the future. So the rally back to the breakout point ends up failing again. So if we were going short, 13,080, the market does sell off even deeper down towards the 12,860 area. So there's an example where we'd have missed the breakout here because the market never really pulled back. But a bit of patience there, we got a better entry, maybe a logical point from the stop, and it ended up being a pretty good trade in the end. I think that was a good real world example because we'd have missed out, first of all, on that big move by being maybe too patient. But we'd have caught the second move, good entry, good stop, and a nice move afterwards. So breakouts, they don't work all the time. Like everything else, there is no holy grail, some magic system, but they can be an easy way of spotting when a potential new trend is starting. And if you're a little bit patient, giving you a good balance of risk versus reward where it comes to where you place your stop and what your target's going to be. We'll start wrapping things up there, but as usual, if you have any questions or comments about this or you disagree, leave us a message in the comments down below. We do read them all. If you like the video, click on the thumbs up. And this is just part of a series, so never miss out on the various videos we do during the week on cryptocurrencies like Bitcoin, foreign exchange, trading strategies like this, individual equities. Just make sure you're subscribed by clicking that button there. And then there's that alarm bell notification thing down there. If you make sure you click that, you'll get notified automatically every time a video gets uploaded. But for this week, from me, David Jones and Trading 212, we'll leave it there, and I hope you have a good trading week.